before we begin, I just want you to observe a few things of what happened in July. So here, take a look at what happened here. So there was a horizontal support at 29.63. And what happened here was we touched here and then we had a swing failure pattern. They bought back up and we went up. And this happened for a month. This kind of price action continued for a month, and then we had another tap at this support, and then we had a V-shaped recovery with inverse head and shoulders, and then we went up and up and up. When we broke out of this range, we went parabolic. So here, what happened here was there was a trend line. I mean, I typically don't connect body or wick. I consider the maximum touch point from the top to the bottom. When we broke out of it, we went up and up and up. Similarly, let's see what's happening here. So here there's a trend line from the top, 69K, and we haven't broken out of it yet. We are still inside it. And then here we have a similar horizontal support and intersection of the horizontal support and the trend line from the bottom. And here we had a tap at the horizontal support, and now we need to form a W pattern. We need to wait for the pattern to develop. You can't jump in. Don't bottom fish because we don't know what is going on right now. It could be, if we break this trend line, we can't deny the fact that we look increasingly bearish here. There are more red candles than green candles here at the support, which is not a great sign. If we lose it, and if we lose this 39.4K, probably we're going to a bear market. Look at here. There's like a weak support at 36K, and after that, we don't have much support here. It's going to be a free fall if we lose 39K. I still believe that we can actually go back up. We're going to hover around here before we break out of this range and go up. But we can't deny the possibility of going down as well. So there is a possibility for us to go down. Sorry. So when are we supposed to long? I would consider that if we are breaking out of this range, we need to go above 43 to 44K for us to have a little bit of confirmation. It depends on so many other factors, but here it could be a fake breakout as well. So it can go up and then again come down and enter into the zone again. That can happen too. So first, number one is to break out of this range and then to stay above and form a proper W pattern. When you can confidently long is when you cross 45.7K, and when you can go all in is when you are above 52K. Right now we are not there yet. Like I said, if we have to recover, we need to make a pattern. So when you saw what happened in July, we had a double bottom, and then inside that you had an inverse head and shoulders. Do you see any pattern here? I don't. This could have been a U-shaped recovery if we broke out of this range, but we haven't seen a breakout yet. We got rejected at the trend line from the top, and now we're going down. Like, it could be a pathway to down, and to the bear market. We'll never know. We need to wait and see how it develops. But right now, if we were to go to the upside, then we have to touch this liquidity pool and grab the liquidity, and then we have to go up. So that's how, and by a wick to the downside to 39.4K is still possible. So we need to wait and see how it develops. I believe that it is going to hover around here inside this triangle before it breaks out. So we need to wait and watch. Right now you can't spot by any tips yet because we don't have any definitive patterns yet. But you can trade the levels because we are inside this horizontal range for the past 12 days between 39.4k and 45.8k. Like whenever you touch the bottom of the range, you long, and you touch the top of the range, you short. So that's how you play it. But right now, I don't see a possibility for us to reverse yet. I don't see a pattern. I don't see any signs of reversal just yet. We need to wait and watch. It is wise to stay away from this market. I wouldn't trade this price action because if you check lower time frame, take a look at this. So it is going up, down, up, down, up, down, up, down. No, this is not a price action to trade. It is better to stay away from this market. So don't trade until we form a pattern and form a reversal. So until then, it is wise to stay away from this market. Let's see what happens if it breaks out or breaks down. Anything can happen, and it doesn't matter. Even if you don't know, I mean, nobody knows, to be honest with you. Like everyone was making predictions when Bitcoin was at 69k. People were predicting 100k or 200k, etc., but it did not come through. And it doesn't matter. Like nobody knows what can possibly happen. If it happens, we have to plan the trade and we have to execute it, and we need to just go about it. Just go with the flow of the market. You can't trade against the market. That's when you lose money. You can't stick to your biases. If you think that it is going to be bullish, but if the trend line breaks, I'm gonna sell off all my spot position, and I'm gonna start shorting if it is going below the 39.4k. If it is going up from here, if it is taking a support and starting to move up, I'm going to continue with my long positions. So you need to understand that trading is a game of probabilities, not certainties. Nobody on this planet knows what can possibly happen next. You have to go with the flow of the market.